Welcome to the Holistic Accountant Podcast. The aim of this podcast is to demonstrate that many issues that your accountant deals with are multifaceted. Therefore, a holistic accountant's job is really to not only help you improve your business, but also help you improve your personal financial position. Before we get started today, I'd like to ask two favours. Firstly, if you enjoy this podcast, please share it amongst friends or colleagues that you think will all equally get some value from it, and or leave a rating where you listen to this podcast. It would help us tremendously. Secondly, if there are any topics that you're interested in, please let us know. There's an email address in the show notes that you can just drop us a quick email and ask us to present on a particular topic. Okay, let's get started. Okay, today we're going to talk about the fun topic of entertainment. That is you as a business owner spending money on either entertaining staff, which could be attached to other events like training and so forth, or also sort of taking clients out to lunch or running client events and those sorts of things. And there's a couple of factors that we need to consider. Firstly, are they going to be tax deductible? So from an income tax perspective. And then we're going to talk about fringe benefit tax. So will there be any FBT liabilities to you as the employer for providing entertainment benefits to your employees? So Mena, let's talk about what constitutes entertainment.
So entertainment can be anything from basically providing food and beverages to your staff, your clients or their associates, or providing any sort of recreational benefits such as going out for a game of golf, for example. So when determining what is entertainment, the ATO provide the four W's, we call them, which is the why, when, the what, when, why, and where factors.
Yep.
So what they are is basically why are you providing the food or drink to employees? So is it basically just to help them get on with their day? You're just providing, for example, tea and coffee in the business premises during office hours, or are you providing in a social context? The next one is what. So are you providing food, drinks, alcohol? Is it elaborate, or is it sort of just light sandwiches and crackers and so forth? The when factor is based on, is it during business hours or outside of business hours? And are you going to, a nice restaurant in town, or is it on your actual business premises?
Yeah, so if you're having a really elaborate lunch, taking all your team out to a really elaborate lunch at a fancy restaurant, that's more likely to look like entertainment. Whereas if all you're doing is providing coffee and some biscuits in your tea room for people to use on a daily basis, that's obviously going to be probably just more staff amenities and therefore deductible.
Yep. And unfortunately, it's not a topic that it's going to upset a lot of business owners and clients of ours especially. But it's important to keep your records nice and clear for these, and obviously any associated notes for what the entertainment was for. It's also important, what we usually recommend is have two different accounts in your general ledger or in your profit and loss. One for entertainment that's tax deductible, one that's non-tax deductible. And the one that's non-tax deductible, you've got two options for. You can either just put it in the profit and loss but not claim an actual tax deduction for, or the second option is you can claim a tax deduction for it, but have to pay what is called fringe benefits tax, or FBT, which you do get a deduction, funny enough, for that FBT tax. However, it's not always in your benefit to claim those expenses.
And it's going to depend on the amount that you're really spending on these sorts of things. Otherwise you've got to prepare and lodge an FBT return. That's just more compliance costs and so forth. So typically we would say to our clients, if the amount's not significant in comparison to total revenue or total profit position, then we would just itemise it as a non-tax deductible expense. If it was a substantial amount, then that's when you consider claiming a tax deduction for it and treating it as FBT. What about gifts to customers and clients, Mena?
Gifts are generally tax deductible. Again, there's certain provisions around, are you earning assessable income from that client, for one? Is the gift in line with the fees that you generate from that client. So, for example, if you've got a client that only nets you $300 a year, for example, you can't go buy them a $250 bottle of wine. It just doesn't make sense. So you got to make sure that your gifts are in line. It's not exorbitant amount of money that you're spending on the client, but otherwise, if they're earning you assessable income, and it could be just like a Christmas gift, or they might have just had a child, for example, that's all okay.
So I think, again, if the expense isn't huge, then you're probably not going to run into too many troubles. But if you're contemplating either implementing an ongoing campaign of gift giving or doing a large amount of gift giving in one particular period, it's obviously best to sort of talk to your accountant about that. And when it comes to gifts to staff members, you can give them up to $300 a year without incurring FBT liability. So if it comes to Christmas time and you want to give them a Christmas bonus or something like that, that's something to certainly keep in mind. Okay, that's it for entertainment. Unfortunately, we've made a fun topic much less fun, but anyway, that's what we're here to do. All right, until next week, bye for now.